Hey there, I'm John Hayes, and thanks for joining us for this episode of the Founders Trust podcast. I spoke with Trill Jeong, the founder of WealthBlock, which streamlines fundraising and LP management for PE and VC firms, hedge funds, and other capital raisers. Trill and I discuss the origins of WealthBlock, his passion for investing, building confidence as a first time founder, setting up a system to bring top talent to your team, and a whole lot more. So I'm thrilled to be able to share his story with you today. So let's jump right in. Today's Startup Spotlight is brought to you by Savier. Savier takes a personalized approach to helping entrepreneurs create a clear path to growth. Through knowledge, coaching, and marketing services, Savier helps entrepreneurs and small business owners apply marketing to achieve their business goals. At Savier, our goal is to empower entrepreneurs to achieve marketing success. Check them out at Savier, that's savvyeur.com today. Hey there, I'm here with Trill Jeong, CEO and founder of WealthBlock, which is changing the way that capital raisers fundraise and engage in the investment management process. Trill, thanks so much for joining us today. Really excited to learn more about your company and your journey along the path of entrepreneurship to get to where you are today. So thanks for joining us.
Oh, thanks for having me.
So tell us a little bit more about WealthBlock and how the company started and where you guys currently are.
Sure. So we built white label capital raising platform for private investments, and that all kind of came from when I was working for a financial regulator here in Chicago on the National Futures Association, and on the side I had a call that part-time passion for beating the market. So I also run a small hedge fund on the side.
Okay.
And the original idea was to kind of enjoy the fun of building algorithms and to pick the best trades and make money. But as it turned out, it's messier than that. So raising the initial capital is certainly not the most enjoyable part of the total business.
I can imagine.
Yeah. So throughout that journey, I recognized that, okay, on one hand, I hated it. On the other hand, if I hate it, many other people like me who probably will hate it as well. However, it's mission critical. So whoever can introduce some sort of efficiency in that space, and then will become the winner. So that was kind of a starting point of an idea of, okay, how do I make this private capital raising, aka private investment sales, more efficient? Then fast forward a few years later, as I saw the technology is all lining up, and then we have the big data, different type of API integration, even blockchain already in place. In my mind, it's a complete picture of a highly efficient solution to streamline the entire process of private capital raising. So that was a kind of the starting point of putting all the pieces together to say, I think I can make this happen. So I simply just put my foot down and start executing on that.
Well, whether you're a founder or someone in the investment space, raising capital is certainly not a fun process, but as you mentioned, it's absolutely mission critical. And glad that you and your company have tackled that and made that process more manageable for many of us. In a space like investments where there's so much compliance, regulatory oversight, et cetera, it can be difficult to get professional investors to switch over to software when they are so concerned about playing by the rules, making sure they're meeting compliance requirements, especially around data privacy, protecting investors' information, et cetera. Did you encounter this as one of the challenges? And how did you go about convincing investors and working with your earliest clients to switch over to this platform, given some of those challenges and such a great concern around the regulatory and compliance space?
Sure. I think absolutely we encounter similar kind of challenges. But one thing is for us as an entrepreneur, our job became to figure out the line of least resistance, to figure out in the entire value chain who's the most motivated to actually make that switch. In fact, that's not the investors. Instead, it is the issuers, the ones who need to raise money. So in this case, our current clients include VC funds, private equity funds, investment firms, as well as funding portal operators or broker dealers. All those, as you can see, they raise fairly frequently. and raising is one major part of their business. If you cannot raise money, you have no capital to manage as a VC or PE, right? So you need to have a very robust pipeline of fundraising, and that therefore they're naturally more kind of concerned about how do I make this scale? How do I become more efficient at the same time, stay safe with the regulators? Voila, you got your kind of a pain point already spelled out, right? Investors, they're writing the checks, they are less motivated. Like they will find something that's inconvenient, but you want them to do something about it or put their effort or money on the line to make a change, they kind of will take a back seat. But if you ask the most motivated bunch, the ones who actually need the money, now you got your kind of paying customers. And just like many other aspects of any industry nowadays, like if you look at technology, essentially it is about driving down the paperwork and the remain yours to keep you in safe territory with the regulators, right? You got a HR compliance, you got a state of filing compliance, etc. And WealthBlock the same, right? So from a private capital raising standpoint or private security sales standpoint, that you need to meet the demands of the SECs and FINRA to make sure that you're safe. And most of those kind of requirements are standardized or routinized. So technology is most suitable for this. And as younger generation, more and more younger people are actually growing up with digital and technology, and the legal framework, compliance framework is actually catching up to it. So people become increasingly more comfortable using it. So it just takes someone who's more motivated, so in this case, our clients, to present this solution to their investors, say, hey, investors, take a look, experience it once. Do you like this better, or do you still prefer printing everything out, sign it, and send it to me? So of course, as long as they can answer the question of is this safe, and they can, our clients can say yes, it's absolutely safe. E-signature is recognized by the law, and they sign up, right? So and also once they sign up, they never want to go back at all because it's such a tedious process.
Oh, absolutely. They've saved the time, they've saved the effort. They're not printing out boatloads of paper. Can certainly imagine where they're never heading back once they've worked through the WealthBlock platform and these new technologies that really have revolutionized so much of the way we engage in compliance and regulatory filings. So, you come from a very strong math background. You have multiple master's degrees in mathematics. You were working for a financial regulator, doing some investing on the side. What really pushed you into the world of entrepreneurship and wanting to be a founder and start your own company?
Sure. I think it has a lot to do with my vision and my personality. And you can call me a naturally born entrepreneur, more of an accidental academician or regulator, right? So I was young, so I always wanted to run my own business, but had no idea what would be my business at all. So I went to get more schooling, so get my master's because I wanted to figure out a more rational way to beat the market. That was kind of the interest. But right after grad school, then I recognized, okay, I needed a job. I needed something more stable to actually get my footings. And so I joined a regulator instead of joining a hedge fund or a bank, which was quite popular among my classmates back then. But that was a few years after the 2008. So big banks and hedge funds are actually firing people. So I said, okay, so I will take whatever opportunity that came my way. At that time, that the National Futures Association received kind of a newfound power from CFTC to regulate this financial derivative market, swap execution facilities. For the very first time in their organizational history, they recognized they need to build a team called Quant. They had no idea what a quant can do, so I'm on board. So I pretty much wrote my job description, and that's what got me started there. But for me, as I mentioned, that there's always this inner yearning to create something of value, to do something that's cool or revolutionary. So on the side, I never stopped. So I tried my own hedge fund because that's the thing I knew. Then because of this experience, I recognized, there is a business I could get into, and there is a huge demand on democratizing the private investment, which I could see the trend is lining up. So one thing leads to another. So when I'm ready, then simply just unplug myself as the regulator and plunge in as the entrepreneur here.
Well, coming out of the financial crisis, it certainly seems like the regulatory space was probably one of the safest to be when it comes to financial markets, and certainly a big shift when you get into the world of entrepreneurship. But you had that nice middle step of working through starting your own hedge fund. I have to ask, just out of curiosity, what similarities or how have you experienced applying some of your investing experience to building a company? Because obviously you take risk in both instances. There are trade-offs, there are stakeholders to both. Have you found that any of your investing acumen, you've been able to translate some of those skills to your experience as a founder?
Absolutely, actually. Especially, I mean, not even including the conversations I have with the VCs, right? So when a founder is talking in terms of ROIs, and then that's an eye opener. So because I'm trained as a kind of a value investor, if you will. So even when I'm building quantitative models, that I have that kind of value investment mindset in my mind. And throughout the daily decision making, that I'm always asking, so what's the ROI? So if I'm about to spend money to do this marketing piece of Google or hiring this vendor to do XYZ, what's the expected outcome? And is there any way for me to quantify that so I can actually compare that? But also, as a financial engineer, I also know that all models are wrong. Some are useful. So number for me is just a symbol. Like for me to quickly filter, sort, and compare, it's not meant to be taken literally. Like a 1 versus 2 really means that this is 2 times more than this. No, it simply means that this is like symbolically, this is better than this. Then it gives me some kind of a symbol to work with. But it is really the mentality of always asking for ROI that keeps us disciplined, especially the early days when we need to make a lot of when we need to run a lot of tests, like test on certain individuals, certain marketing channels, certain product initiatives before and with that mentality that we never know until we prove anything. Then it's more of a kind of a defensive play, that like whatever is out of the window will be gone. Does it have value? Absolutely, it does. It's called a fee that you pay for the lesson you learn. But if you overpay, which is easy to do, and then you simply learn too little, then you don't have enough money left over to run more tests. And before you run out, you need to hit that milestone for you to advance to the next one, or even raise the next round. So it's always kind of competing for the limited resources, and that requires a lot of kind of prioritization, calculated risk taking, and then having this more of a investor mentality certainly keeps us more disciplined.
No, I can certainly imagine that, and I think your point on applying models as directional signals rather than absolute signals very much resonates with early stage founders who are looking for directions and signals from these tests. As you've mentioned, when you're testing your MVP, when you're sourcing feedback, no one has set financial projections that anyone's expecting them to hit. At least not rational investors are expecting them to hit, but they are expecting to see that directional change and that directional movement. And I think it's so interesting that you've applied that same learning from quantitative analysis and model building to the MVP and testing process, because I had never made that connection before, but it certainly makes sense. I'd say, Trill, having such a strong quantitative background, what do you view as your superpower as a founder? Is it that quantitative analysis, or do you find that being a founder and starting your firm in this case has allowed you to maybe exercise your strengths outside of the quantitative realm?
It's certainly the latter, actually. The more I use, quantitative method for me is a tool. It's like one of the many tools in the toolbox. But essentially, at the end of the day, it is to help me rationalize or quantify certain qualitative factors. So if you ask me what's my superpower, at the end of the day, that ties into what I believe that the most important, I would say, characteristic of a founder. And for me, it is I'm a natural strategist. So in the short run, I'm pretty gifted in absorbing data, making observations, and quickly come up with enhancements. So system procedure and the policy design is all kind of comes easy to me. But more important than that is my ability to identify talent, identify their I would say strengths and weaknesses, and put them in the right place, and to provide the right guidance and the support and the amount of resources. And also, I have many of them, so put them together, so lead them towards a common direction. And of course, play the coach along the way. And that for me is very important, and something I work on consistently. And also, because I have this, I would say, gift in observing and quickly identifying the pros and cons, that certainly comes handy for me to make those kind of decisions as to, okay, where do I want to put you, and where do I want to go from there. And it actually helps a lot. So right now I have a relatively small team, and it's easier for me to manage. But I have the, I would say, intuition that as the team is growing bigger, that this gift can become more pronounced as a team grows bigger, as the system becomes more complex. In fact, I probably tend to excel in a more complex environment.
Well, I know your background certainly involves incorporating so many complex factors into making key decisions and key models in this case, et cetera. So that certainly makes sense to me. And I know you have a small and talented team, and WealthBlock continues to grow. Just as with any startup, I know every company encounters some challenges along the way. What were some of the speed bumps, or a few of the challenges that you have faced in building WealthBlock, and how did you find ways to get around them or to work through them and ultimately make your company stronger?
I think the biggest challenges of the early days is mostly ourselves. We are insecure. Like, we were desperate, like first time founder, right? So we're building something that doesn't exist yet, or even before that, we didn't even have a clear idea as to what that thing looks like. Who's our customer? What does our customer look like? So when we just have took that first step, try that first thing, and get the initial conversation with the first guy that shows any kind of interest, that we're kind of so desperate, we want this to go so well, right? And the other side can sense it, and very often, more often than not, we're running into people who want to abuse us because of that, right? It's either the vendor who promised all the world, hey, I can raise you the fund, or the marketer, right, who also made that promise, hey, I can bring you so many leads, XYZ. And then I'm an engineer by training. My co-founder Deji is a hardcore developer, right? So we don't know much about sales or marketing or capital raising, right? Investment sales. So we tend to believe. So we trust them. So we take the opportunity. So you show interest in us early on, that we feel very grateful. So we like to work with you. But because of that, and very often that you fall in, especially the early days, and we partner up with some bad characters, and then we have to learn the lessons the very hard way, right? It burns our time, burns our very limited capital, and with the very little ROI to show for. And then very quickly I have to own it and to say, okay, I need to cut my loss quickly, identify the wrong person on the bus and get rid of them, and then move on to the next one. And then it's kind of a more rolling with the punches, if you will, that after a few mistakes that you got to win, then you learn, oh, this product actually sells. And so instead of the ones that were making the promise who didn't deliver anything, now here are the real paying customers, and that they don't try to abuse us, they pay because they see the value in this, they want to use it right away. Then we start building this incrementally, start building this confidence in the things that we do, in the product that we do. It does deliver value. then the next customer who comes along who wants to pull the same trick, right? Dangle the carrot. I'm gonna invest in you, but let me use your platform for free for a while. I'm like, that happened more than once. Then we learned that from last time. Oh, last time when that happened, what happened? Okay, no. I'll give it some more confidence to say no. And so over time, we'll grow to be more strong, more confident. So even nowadays, we actively ask certain clients to not to use us because they're not suitable for our business. Is that really comes from a position of strength to seek win-win, because from our standpoint, now you are not well capitalized, or your strategy doesn't fit this platform, then I mean you'll be a lose-lose eventually for both of us. So I mean, we want to be a good partner, and also we feel secure enough to tell you the truth, even when the truth hurts. But eventually it's going to serve both parties. So we have come a long way, but still a longer way to go. But I think the biggest challenge always originates from our own kind of insecurity initially.
That point hits so close to home, Trill. I'm a first-time founder myself, and I immediately, as you were saying all this, was thinking back to my experience first starting out building my company, Market Trust, and you think about where you are mentally at that point, and you have all this passion, you want so badly for it to work that desperation is not necessarily the right word, but you have this resolve to find any way to make it work. And so you look for partnerships, you look for these first-time clients, and they can just tell. They can tell that they have leverage over you, and they can tell that there's that dynamic where you need them a little bit more than they need you probably right now. And so they play to their advantage, or you end up working with people, whether it's developers, marketers, salespeople, whoever, that don't quite produce the way they say you will, but you're taking those leaps of faith to make it work or to think that it'll work. And sometimes it does and sometimes it doesn't. So I think your point about increasing in confidence as you pick up the right wins, not just any wins, but the right wins, working with the right people, bringing the right clients on board where it is a win-win situation, that does so much for your growth in an intangible way that contributes to more tangible results down the road. And I think you're completely right when you speak to the fact that you have to be speaking from a place of confidence when you can be honest with clients and say, hey, this probably isn't a great fit between your company and us. And that's just your company providing value, even when it's not a paying client, and that ultimately does so much for your brand reputation as well. I know WealthBlock has been scaling and growing quickly. How do you think about that scaling process when it comes to finding the right team members, maybe leveraging up on resources to meet new demand? How do you approach the scaling process?
Well, it's certainly every time that you hit a milestone, let's say from 500K ARR to a million, a million to 5 million, and 5 million to 10 above. Every time you hit that, it's almost required. You must scale. And 4 dimensions, right? You have the leadership, you need scale, human capital, then your infrastructure, your communication, and your marketing. All of those dimensions must be scaled. So specifically, when it comes to the human capital side, so far I have been very fortunate that my co-founder and CTO Deji, he's a natural leader by himself. By the very definition, when he says something, people follow. And then the most recent 2 new hires was from his original previous firm. So he handpicked the best ones, and of course, then he convinced them to join us, mostly because of his I would say personal chemistry. So I would take that early, I would say fortunate events, but that certainly is not something that can repeat, right? So at some point that we're gonna run out of people that understands that there must be a system for us to kind of systematically generate the pipeline of a great talent. And then for me, that I resort to my strongest suit, which is system design. Then I outline in my head that, okay, how do I systematically identify the talent and retain talent? And the number one thing is clarify the why. The why is going to help you find the who. And the who, once the right who on board, they're going to figure out the what and how. And as a CEO, my primary job is to clarify the why. So starting from day one, we had our core ideology. Core ideology is top management teams sit down together, come up with the values we believe, the principles we have. And we use that to actually go out recruiting and pretty much bring it up in every conversation to see that are you a fit, are you not a fit, do we share the same values together? And that is the number one critical factor and in selecting the talent. The next one will be the identify the abilities. And then the mechanical, I would say, tools can become available, right? So the job experience, keyword search, etc. And then that helps us gather and process a lot of data to quickly identify people with the ability and skill sets. And to combine those two, then we got our, I would say, method to do that. It's not a foolproof method. It comes down to, okay, what tools, what services we use to consistently get more and more people coming in, so we can perform the interviews in such a fashion that's quickly allow us to eliminate the wrong people and just focus on the right people. But that will be 70% of the effort, is to identify the right person. Then the rest, then 10% of the effort will go to making sure that as soon as we find out someone's wrong, the wrong person, I need to make it very easy to get rid of. So that's working with the HR to make sure that we're legally compliant here and there and have the mechanism in place. And the middle 20% is essentially retention. Once you get the right person, that's the 70% of the problem already addressed. Then the next is just don't piss them off, because people don't quit jobs, people quit people. So the job becomes, for retention, the job becomes, can you create a culture that they enjoy? Can you build a team that they feel proud being part of? And can you give them enough room to enjoy autonomy to grow consistently? Can you reward them in such a fashion that they feel valued, etc., etc.? And just like any sales, customer acquisition is the hardest, so 70% of the effort. Retaining them, as long as you don't screw up big time, I think you're fine. So it's 20%. But do recognize that you're gonna no matter how much you do, you are bound to run into some bad hires. Then make sure that don't let that one person drag down the entire team. Make it very easy to part ways. So that's kind of a structural approach that I have in my head. Of course, when our company are of different sizes, there will be different tools and the talents available at my hand, right? So right now that we use personal referrals only, and then as we grow bigger, probably we'll leverage some kind of social media and branding and some agency. As we grow even larger, that there will be in-house team building out the systems and doing kind of a video chat or some kind of personality test, et cetera, et cetera. Like all those are kind of a means to an end, but conceptually, that those are the kind of I would say the criteria that one needs to hit in order to be identified by us, by our culture, to be an A player.
Honestly, Trill, I think that is one of the most insightful and thoughtful approaches I've heard to scaling a team. And I speak with entrepreneurs all the time. I do many episodes of this podcast, but just the way you broke that down into not only the piece of how do you find the right people and the right tools, whether it's referrals, whatever it may be, but thinking long term in terms of leaving yourself an out in order to eliminate or mitigate the risk that comes with bad hires, which, as we've all seen, can really produce a sink or swim outcome for a startup. Especially when you're beholden to people who you maybe don't want to work with long term, leaving yourself that out is really critical. And I think that's something that a lot of entrepreneurs often forget. But with that insight from you, I think it will certainly help produce better outcomes when it comes to thinking about that scaling process in the team. So before we hop into our last 3-question grand finale here, I have one final question for you.
Sure.
And you've probably touched on it in several different ways already, but what one piece of advice would you give to founders who are just starting out?
I would say philosophically, on a high level, because I think in big picture, is to, number one, have faith in your future, but at the same time, really focus on execution right now. So you need both. components, because throughout this journey, the biggest challenge will be yourself, your self-doubt, and many naysayers around you, or reality is not going your way for the time being. So you need faith in order to survive and kind of grow and eventually succeed, and also to keep it fun. But at the same time, while you're having that in mind, you gotta deal with daily reality. It's not just merely a tactic for positive thinking. Rather, you need to confront the brutal reality and be very honest. And then still, but that's not to get you depressed. Rather, that's meant for a concrete observation of the reality, so you can come up with a solution to deal with it. And I think one of my favorite book, 7 Habits of Highly Effective People, and the very first chapter was actually talking about the circle of influence and circle of concern. Circle of influence, that's where our focal point should be. That's where we can do a lot of work. So execution on the now to your best ability every day. Leave the circle of concern out there, and I would say have faith in that things will turn out the way that you want it to be. Even if you see some kind of a risk approaching you, you don't have to pre-plan for too far ahead, which is the problem I usually have as engineers. I always think too far ahead. Instead, have faith that whenever things on the horizon are approaching you, some kind of danger, it also brings some certain type of solutions with it. And so far from experience, that has been the case for me. Otherwise I could literally kill myself because of all those contingencies I couldn't possibly cover. But as I roll with the punches on a daily basis, I realize many of the things I worry about don't happen. The few things that do happen usually come with some kind of solution already attached to it. So.
No, that is tremendous advice, and we talk a lot about kind of the roller coaster of entrepreneurship on this show, and the fact that there's a huge, I think, issue in the market of glamorization of startups. But as you mentioned, the day-to-day reality is much tougher, and brutal, I think, is a right word to describe a lot of it. But you do have to have that faith. You do have to be able to filter through the worries that are more contingency-based versus execution-based or reality-based. And that can be very difficult, but it certainly comes with time and experience. And I think those feelings of self-doubt lead much more to that early on in the journey of being a founder, and start to wear away and start to decline as you pick up that self-confidence and you pick up that traction in the marketplace. So I think that's certainly terrific advice. Let's head into our 3-question grand finale here. A little bit more fun, a little bit lighter. But what's been your favorite moment working with WealthBlock thus far?
When we 8x our client base in the middle of the pandemic, I was at the same time proving invest early naysayers wrong. Especially from 2 or 3 years ago, few people really understood our business, that everybody's doubting what's your market size, and where do you find your customer. At that point, that we didn't know. Like it says, I'll figure it out as we go, and that was not a good enough answer, right? So one step at a time, I figure out what to sell, what to build, and who to sell to, where to find it, where to find them, where to find many of them, etc. It's like one step at a time, and then pandemic hit, and as a result of that, or partially as a result of that, people are forced to use more technology, and our client base 8x. Okay, now we got real money coming to the door, cash positive, to show any VCs who's asking that question, right? Where's your market? How big is your market? I don't know how big it is. I don't have the number, but here's how much money we're making right now. So you figure.
It may just be a competitive streak in me, but proving the naysayers wrong is such a rewarding feeling. And not that you can get caught up in that, but when it does happen, you have to celebrate it. Absolutely. So, all right, second question. In what ways have you personally grown the most in this experience of building your company?
I've grown, I think I just mentioned that a little bit, right? I've grown to have more faith in God. I'm a financial engineer. Personality-wise, I plan for all different kind of contingencies, right? Family planning and financial planning, etc., etc. So I was kind of living in all just like a value investor. Constantly, I'm thinking about how the business fails. So cover that. And that gets me to be depressed very often. And then I started running my own business. I realized that I can't live my life like this. Otherwise, I can't move. I can't wake up. I don't want to wake up. I live in fear all the time. And then I started picking up books and kind of a self-help books to see that how do I really cope with that kind of anxiety and worries. And then from many different type of readings, actually, I start seeing patterns. Is that faith born out of I would say gratitude. Be grateful on all the things that I already have really helps me realign myself when I look into the future. So think about that. Like I already achieved a lot in my life, right? I'm blessed with my parents and coming to the U.S. early on, and went to some of the top schools and got a really good career. So I have already achieved a lot, and the very fact that I'm among the very few who are fortunate enough to actually receive the early funding to start a company is kind of almost unheard of. Like I received my initial funding within 2 weeks. All because when I was running the hedge fund, I made some people some money, and this time they blindly backed me without even asking what they planning to do. I was like, here's an idea. So I have been very fortunate, and I realized that the more grateful I am, the luckier I become. I say, great. So continue being grateful. So that develops into faith and into sense of calm into the future.
I love that answer, Trill, honestly. And a lot of times I think many of the wins that come with being a founder aren't necessarily the ones that you have on paper, but it's the personal growth. It's the relationships you build. It's those moments of feeling like you yourself are becoming better or stronger, more confident, whatever it is. And I think that's a lot of times maybe the more rewarding part than some of the financial outcomes. But I love that answer. All right, our final question here. As part of the Founders Trust community, we always want to support our guests and the companies that we have on. So what is the one thing that WealthBlock needs to take that next big step or reach that next big milestone, whether it be capital, an introduction to a key hire, connection to a strategic partner, whatever it may be? What's that one ask that you would have of the Founders Trust community to help WealthBlock get to that next level?
Yeah, as always, introduction to potential customers. Once we have customers, the investor will come. Once we have customers, the vendors will come, and strategic partners will come. So everything kind of depends on how well we grow, how fast we grow. So that's I figure. By having customers, and that is kind of the most important thing out of all.
Well, we'll certainly keep our eyes out there. We know plenty of people who are raising capital in the market and can certainly benefit from WealthBlock. Trill, thank you so much for such a terrific conversation this morning. Appreciate all of your advice. I personally have taken so much insight away from your experiences and your shared stories. So thank you for joining us today, and really excited to follow WealthBlock's journey going forward.
Thank you very much.
So let me know what you think of today's episode. Comment on our social media or send us an email at founderstrustpodcast@markettrust.io. Now go get building.